Welcome to the Summit Series podcast by Elevation Capital, where we speak to some of India's top business minds on their journeys and the lessons they've learned. Our guest today is Varun Dua, founder and CEO of Acko, India's most loved digital insurance provider. Through its tech first approach, Acko is reimagining the full stack of insurance, right from creating products to distribution to claims management. This enables Acko to create cheaper products and delightful experiences for digital first Indians. Thanks a lot, Varun, for joining us today. I'm super excited to have you on the Summit series.
Thanks, Mridul. Thank you for having me over. Excited to do this with you guys.
Before we begin, let me share a little background of the company with all of you. Acko was founded in 2016 and in a short period of time has launched insurance products across a number of verticals such as auto, health, appliance protection, travel, and served 70 million plus customers. The company is truly digital first in its approach, and the approach has been well accepted by customers as Acko commands industry leading NPS scores and is growing close to 3x year on year, with the current premium run rate of over $150 million annualized. Elevation and I partnered with the company as the first investor in the record 30 million seed round. It was a record back then, and we'll talk more about it. The seed round that Acko raised in November 2015. It has been an extremely fulfilling journey thereon to see Acko grow and succeed in its mission to create a digital first insurer. The company recently raised $255 million in its last fundraise, where it was valued at over $1.1 billion. Varun, let's maybe start from the beginning of the Acko journey.
Sure.
Uh, a lot of our listeners here are early stage founders, so it'd be helpful for them to know what was your background before starting Acko, and how did you manage
Yeah.
to raise $30 million in seed round in 2016? It's a fashion now, but wasn't really a norm then.
Yeah.
So would be great to get your perspective.
Yeah. So first thing I can tell you, it wasn't wasn't a cakewalk by any by any standards, and probably Mridul, you're aware of a lot of the backstory to it. But I'll probably start with your first question in terms of my quickly on my background. So I've spent most of my life in insurance. While there was no real fascination for insurance that I had when I got out of college, but that happened to be my first job. And so I've somehow gotten attached to this space. I always tell the team or anybody that I've been talking to that I think it chose me rather than I chose I specifically chose insurance. So I worked for about 5 years at AIG when the business was, the insurance industry was pretty new. Had a short stint with the mutual fund business, but was always quite fascinated with how you make money by like selling probability, right? At the end of the day, you're selling probability, and the traditional insurance companies then, and even I would say to some degree even now, were just did not have a sense of using technology in meaningful ways. Of course, those times were different, and somehow I got together with some like-minded folks and started ventured out on my own and started building technology for insurance companies, some middleware. Then I decided to do a I thought that that wasn't good enough, wasn't solving a little bit of the problem. Then I decided to do CoverFox, which was a marketplace or a brokerage business. That itself, again, in a pretty quick time, I figured that again was not going to solve the problem. So for me, I think the space has been the same. It's like one continuum, of a journey. I've been an employee. I've been a software vendor. I've been a broker selling their products, and now manufacturing our own products. So before the words fintech or insurtech were even coined, I think I have managed to somehow stick to this. So yeah, so that's pretty dear to my heart, and that's the way it's one step leading to another. Hey, that we can do this better. This could be solved this way, and this could be solved meaningfully differently. So that's a little bit about my journey. On the round, I think just the sheer amount of time that I'd spent and maybe done one or two businesses on the insurance side, of course, helped the fact that there was a little bit of credibility attached, that at least there's understanding of the space, given it's complex, it's regulated, and so on and so forth. And it was an ambitious ploy then, because there were no startups who were getting a license. I think sometimes I still pinch myself to say that how did it happen? yeah, I think the experience and some of the network really helped in people having that conviction that let's back this. It was pretty ambitious at that point. Yeah,
Yeah, I know it's fantastic. In fact, the other interesting part of this is what you mentioned, which is this is the third company within insurance. So, you will have a lot of
yeah,
founders who will get successful in second or third attempt, but they will kind of pivot
yeah,
around. I remember our discussions when we joined hands in your second journey, which was at CoverFox. There's those
yeah.
stairwell discussions on saying, okay, real value, let's do manufacturing, let's go there. But help me understand, like, what's the fascination with insurance a little bit, and what gave you the confidence? Because one could argue that the past two attempts didn't reach the full potential they could have,
Yes,
or at least
yeah.
somewhere had scalability challenges. So still, you were like, you didn't feel tempted to go somewhere else, some other space. So what's the fascination with insurance, and what made you kind of persevere with it?
I think it's a little bit of elimination. I don't feel very confident with anything else. Here, I don't think I'm pretty good to figure out anything else. So, see, it was, I would say one is sometimes fatigue does set in when you're trying to solve something and it's not getting solved at the pace and scale that you would like to solve, and therefore people try to probably look at adjacencies or different areas or something completely different. For me, I think what ended up happening was the thesis was getting clearer and clearer. If you ask me when I started to do something on my own and provide software services to insurance companies, if somebody would have told me that back then in 2012 it was possible to set up an insurance company from scratch, I would have done it then. I just didn't think it was possible. In my imagination, it was not possible for an individual to in 2012 to come out and set up a insurance company. The way India has moved, the way capital has moved, the way regulations have moved, I think a lot of the ecosystem effects have come into place coincidentally beautifully with my journey, where the experience of entrepreneurship and what is scale, how to solve problems happened, plus the ecosystem was developing parallelly, whether it's the payments ecosystem, the regulatory ecosystem, the capital ecosystem, all of it, started to come together. So at each step, I could practically see that we haven't solved. It was very clear what we were not solving. It was not, there were structural challenges. We were not manufacturing the product, or we had no say on the claims. As a software services provider, I could enable. I was an enabler, but the
Hmm.
business model was not changing. And I said, okay, to change the business model and provide better value to consumers, I should start selling the product, because enablement is not really helping. When we started selling the products, it's like, hey, the products are not good enough. It's not happening. So the thesis was very clear, and the space is massive, right? Like it's just it's one of the largest industries in any country. You insurance penetration, GDP, all of that go together. So I think there was very clear things that we were not doing, which were not possible until some structural fabric changed. So it was, and if that structural fabric, I could see the next step happen, that we could get a broker license. We could actually start manufacturing the product. Then the conviction just kept getting stronger rather than fatigue setting in.
Yeah, no, it's amazing and super insightful. It's also personally for me very inspiring to see the resilience you've shown in doing this now for more than a decade, almost, right?
Yeah, yeah,
In this space. And coming to Acko now, once you had the conviction, once you had the dollars, you made some very interesting design choices, right? And uh, in some sense we say, okay, only online. Auto will be the first product, along with some experimentation on ecosystem products. um, Sequencing of which product when. So maybe you know your thought process at that time, which was very going back to early days of Acko, of saying
yeah,
how to choose which GTM, which product, how to sequence. So day one design choices and some glimpse into thought
yeah.
process around that.
Sure. So, just generally when I talk about insurance with the larger community, whether it's the media or new talent that we're trying to onboard, or just even investors, there is this common theme that a insurance is a push product, and how do you make it? There's this just general commentary around it. my learning across the years has been that this is a very simplified way of putting things, that it's a push product, oversimplified, I would say. When a customer is buying auto insurance, it's pretty much pull. It's almost enforced by the government, right? You have to buy. So there is a different motivation to buy, because you're almost, some people understand that I should insure my car. Some people just buy it because I need to comply with the law. When I buy health insurance, it's one of those things that doesn't strike me that I need to do, because there's no enforcement. But as I get to my early to mid 30s, I start, maybe have kids, have a family, like suddenly starts striking you, or my parents have an episode or something. That's the age when it starts striking you. Okay, that maybe I need it, but it's too complex a category. It needs a lot of explanation. When you say life insurance, it just becomes completely different, because now I'm saying, hey, will the company be there when 30 years from now when I pop? The same customer deals with each of these categories very differently. We might all brand it insurance, but his motivation and his behavior in auto or motor insurance, he's a price conscious buyer. That same customer becomes value conscious on health and suddenly not price conscious. And then suddenly the same smart digital customer will also have his LIC preference for life insurance, because I'm not sure what's going to happen 30 years from now, right? So these customers actually, the motivations across categories are very different, so it's not a one size fits all. So coming back to the design choices, I think what we wanted, uh, uh, it's a financial product where you're parking your money, with an insurance company, and hope that they pay you when the time comes. So from that perspective, you cannot start with life insurance. You cannot start with health insurance, because you need to develop trust in the user. Like today, if I tell my relatives or my friends, they still won't buy life insurance from me, right? So, but auto, yeah, it's an annual product. I'm valuing price and convenience. I know that if you don't do well, and you make me struggle as a customer, I can, switch out to some other insurer next year. So if I make the experience easy, if I give you a price equation that works for you, there is a much higher chance of trial. And then over a period of time, as the trust starts to build, you can expand into deeper categories, or are much more complex or trust related categories. Not to say that auto doesn't need trust, but the cost of trial for the customer is lower. He doesn't feel that he's committed into a 20-year relationship. You don't know, new company hai, hoga nahi hoga, kya hoga. Those kind of pieces are not there. Second, I think there's also been a very successful playbook. I think I've been always fascinated by Warren Buffett, Berkshire Hathaway, Geico. The kind of business that is built, and the kind of float money that they generated, and just created that empire,
Mm.
on top of it. Such an simple and elegant and intelligent, business model. And India didn't have any of those. So I think a bunch of these things, that enforcement kind of product, it needs compliance. There's a deadline for people to buy. Product is simple. Cost of trial is low. There have been successful playbooks. So that became pretty clear. One interesting thing that I'll add is, but I was still not confident that India would see a Geico. Whether we would do it, somebody else would do it. I'm not sure, because the day and age in which Geico was built, there was no Amazon, no Paytm, no PhonePe, no Alibaba. These ecosystems didn't exist. These very
Mm.
ambitious ecosystems, right? Who want to sell everything and own the user. Cost of customer access is practically zero. And if any of these guys get ambitious around insurance, they can kill my cost of acquisition. I'm a single product trying to build a brand, and so Geico was made in the 90s, when none of these ecosystem ambitions existed, right? So, and there were some interesting choices then, that we took a little bit of a hedged approach. And one of the entities we had on the cap table, and early we formed a business partnership with Amazon, because I
Mm.
wasn't quite clear whether, you know, I thought we needed one hedge in case distribution doesn't play out, in a unilateral linear world, the way it played out 20 years ago in the US. China and India have grown very differently, you
Yeah.
know. So some of these choices, but auto therefore became clear. And partnering with ecosystems came as the customer acquisition flywheel, that wherever these digital customers are, we will go and attack them. so that they get exposed to the brand fairly quickly.
Yeah. No, in fact, I remember our discussions then, because that time Zongan was there and they had taken
Yeah,
the choice to have three strategic on the cap table to get distribution. So I do remember that discussion on why that GTM, why that partnership made sense. And Varun, switching gears to the business model, right? And when we say tech first, I think it would be relevant again in a category like insurance to understand what do you
yeah,
mean by tech first. At least my simplistic understanding is, take the insurance stack, there's acquisition, there's underwriting, and there's claims, and ops and support functions, of course.
yeah.
And maybe you can pick them, or maybe you can use the framework you use, but I
Sure.
think there is some very, very fascinating stuff you're doing using technology to innovate or rewrite how these products are sold, how these products are underwritten, how claims work. I would
Yeah.
would love to get a glimpse of that for our listeners.
Sure, the framework is pretty similar to what you said. There is this, and I think Acko needs to do a slightly better job on its PR, because everybody just calls her India's digital insurer. It's not like ICICI doesn't do digital, or somebody else doesn't do digital. It's just that digital is a channel, right? It's not a business model, in my opinion.
Correct.
But tech first would mean that you are able to, across the three key levers of the business, which is acquisition, underwriting, and claims fulfillment. You are able to use technology to fundamentally change the underlying cost structures. If we can fundamentally change the underlying cost structure with technology, that's when it makes sense. There is no point just being digital for the sake of being, digital. You could have an omni-channel approach if that makes more sense for your business. But I think what it allows us to do is actually break down the cost structures and the experience for customers very differently. And it has a significant impact on how insurance P&L works. So to give you a sense on auto, which is still our flagship business, almost like 50-60% of the revenues, today distribution costs are about 25 to 30% for the traditional insurance industry, right? So when I source direct, and they pay the same amount every year for the renewal. So it's not like it's even a one-time acquisition. It's every year a recurring acquisition cost, which they pay to agents, banks, car dealers, and so on and so forth. Now, if you look at it fairly simply, if the customer stays with me for 3 years and I pay 25 every year, I paid 75 bucks over 3 years. Even if I do a net present value of that today, it's maybe 60 bucks, because they would pay 25 each year. Anytime my direct to customer cost of acquisition is below 60 bucks, there's arbitrage. There's a, I can be 60 bucks cost of acquisition, still be cheaper, assuming we are both holding the customer for 3 years. So digital or technology allowed us to source customers differently, and that created a distribution advantage where your cost structure for distribution is changing, because the traditional distribution fabric is expensive, and you could disintermediate that structure and really have a differentiated go to market, which shaves off cost from there. Second, coming to underwriting, today when you don't have enough data, you are not able to underwrite well, also because the traditional distribution arm doesn't give you enough data to work with. When customers directly come to your app or to your website, or you use multiple data sources to figure out how it moves, there's very interesting insights that happen. So 20% of so typically for insurance companies, loss ratios or claims are anywhere between 60 to 80% of the premium that they collect, depending on what category you're operating in. And these claims are caused by 15 to 20% of the people. 15 to
Mm.
20% of the people cause 70 to 80% of the claims or losses. Even if you are able to use data to weed out two out of those 15 or 20, that's a 10%, improvement on your P&L. And third is claims. The experience through, today you deal with a workshop, with an insurance company, with a surveyor, versus just a click of a button and your claims get deposited into your bank account, or things just move very seamlessly. I think that's a whole different experience vector for customers. And I won't go into the details right now, but on claims also you can save money with technology to figure out, what parts are getting used, how do you channelize your claims to the right workshops, and, how do you do load balancing between workshops. There's a whole art and science there too. So when you look at it, whether it's distribution, underwriting, or claims, you can fundamentally shave off a lot of cost and pass on that value and that experience to the end consumer. And when you pass on that value and that experience to the end consumer, our thesis is you'll continue to grow because you're doing right for the customer. You're giving them cheaper products, you're giving them better service, you're making helping them customize according to their own needs because they're not being sold standard products. They can come and customize the product basis what they do. So I think it just fundamentally changes cost structures, and that's what we've been focusing on.
Yeah, no, it's fascinating, and I know you're deliberately not talking about what all you're doing at claims across your products, but I think that over time will be a
Uh,
real massive delta.
yeah,
I think both for customer experience and cost. And I keep using your analogy. I keep using that as my phrase to a lot of founders I meet. I say this, and this is a pity that in auto you still underwrite on pin code and car make.
yeah, yeah,
All of us deserve better. That's something I learned from you. So hopefully we'll.
yeah,
The other business you've created, which actually is quite sizable now, and is this ecosystem products, right? Like mini
yeah.
products, multi ecosystems, whether it's the Ola safety insurance, the attachment product on commerce, on mobile, travel. And I think that breadth only, Acko is probably the only one with that breadth of product. So, what's
Yeah.
your thought on creation of these products? What's your worldview of how large this will be? Why are you doing this, and what becomes of it?
Yeah, so this was we took some learnings across companies in China, whether it's Zhongan or even what was happening in credit, with checkout options on BNPL and all that. Maybe it's BNPL and stuff is relatively newer to India, but it's been around for a little while. So I think I'll break this down into three vectors. One being who is my consumer. Doesn't matter whether we're selling auto or health or whatever it is. We are currently, at least phase one of Acko, as we see it, is focused on the digitally native Indian, the top 150 million people who we all are trying to sell to. Whether it's e-commerce or food delivery or financial services or whatever it is. That customer does not today have a truly digital first port of call insurer. Insurance is
Hmm.
not a category where you like to shop around, right? You like to stick. I find you reliable. I'll just go with you. It's not a category where every third day you want novelty. It's a category. It's not like you want to travel to different places, order different food or whatever it is. You want to find a reliable insurer, easy, and stick with it. In some sense. So, but when we look at this consumer, there's no such, I don't have a go-to insurer even prior to Acko. Like it was not like I will go to ICICI, I will go to Bajaj, or I will go to, I'll, I'm picking and choosing at every step. So that's my consumer. So coming back to the ecosystem business, one of the things is that consumer typically has three long-term needs: auto, health, and life. But apart from that, there are a lot of sporadic needs: travel, when I'm traveling, gadgets, appliances. Some small needs that may come up, which are very impulsive decisions. Either I take it, I don't take it, or sometimes it's again required by law, or I buy an expensive phone and cost of replacing the screen is maybe half the price of the phone. So these are not very conscious decisions that the user is taking, but if contextually presented, will might bite or might see value in it. So while auto, home, health, life are your recurring long term needs, this is what we call in our internal parlance. These are the sporadic needs. These are the momentary contextual needs that come up, and these are likely to happen at the point of transaction, not as an independent buy. When I'm buying a ticket, when I'm buying a phone, when I'm taking a ride, when I'm taking a loan, because at that time it strikes me that this makes sense. So we converge two pieces of logic here. One is to say that these sporadic needs for these users we need to fulfill while we are working hard on the depth on the recurring long term needs of the user. These sporadic needs give us a great opportunity to again reduce cost of trial and create a customer acquisition flywheel. Because wherever these customers shop or use apps for transport or travel or whatever it is, if these are the most frequent categories, and if I am present on those categories, customers see me a lot more often. The cost of trial is even lower than probably an auto insurance product, and it becomes a way for us to get access to millions of customers. Also, insurance is a low frequency business. This increases our frequency because you travel, shopping, and so on and so forth. So to give you some sense, we have about 10 million people who have 3 4 touch points with us a year. you know
Wow.
uh, while 70 million have had at least a single product, there are almost 10 people. It's joyful to see when we see some of our power users who have really adopted to the platform. They have 2 cars, 1 bike, the last 2 televisions they bought of Amazon, the phones that they've bought for their family, their employer health insurance, the last 10 domestic and international travel they have done. All of it is with Acko. And that's really that destination and that frequency which is sort of helping get trust in the brand. So and surprisingly, it's turned out to be a very profitable business for us. It's made money from day one. And so if somebody gives me access to millions of consumers, that they start trusting me and I make money, I think we're happy with that.
Don't say that too loud. Your distribution partners may also listen in.
Yeah, that's true.
But but it's fascinating to think of a concept called power users in insurance, right? Because it's one of those
Yeah,
product categories you would imagine you go once a year, you get done with it. It's a headache. You can't understand the damn product, and you want to move on in
yeah,
life. But it's quite fascinating. I also think the other thesis I've had for a while is that financial products becoming contextual in the flow of a transaction will become more relevant, which is where, I'm taking a ride, let me insure. I'm taking a TV or electronics which are high value, let me take an attachment product. I think makes a lot of sense. I mean, if you
yeah.
abstract it out, auto insurance also new car sales because it's at point of sale, right? So it is
Yes,
contextual.
yes,
But it's fascinating how nice multiple products you've created on that. I think it's also great the way you articulate your customer, Varun, saying digitally native consumers in India, maybe 100, 150 million. It is also interesting how you talked about earlier how their behavior changes by product category and archetype, right?
yeah,
Like different in health, different in auto. I think that has some implications on how you think of your brand
yes.
and brand resonance. I would love to understand your thoughts around brand building so far. People are looking for different things, different from different products. How does that get into the Acko umbrella brand, and what do you think of the brand positioning and core values that you're communicating?
Yeah, this is I would say a tough one and a discovery process for us also. I think we've done well on one vector on the auto insurance side. When any new brand starts, I think it needs to communicate its value proposition fairly clearly. There are brands which are built on round pegs and square holes. The Apple, which is really trying to appeal to a deeper sense of self. And then there are brands which are saying, "Hey, buy my product; it's cheaper, it's faster." In some sense, and this is a journey to traverse. I feel, and as a new brand, you are very product focused. That what is the value my product is giving you, and communicating that creatively, and all your brand building efforts, I think, or all rather our brand building efforts have gone in communicating that value to consumers, and communicating that creatively and ensuring that they land the message clearly. For example, in auto insurance, what struck gold for us was not to say savings on insurance, or the paisa bachega 20% off, or come by is cheaper, or my claim settlement is 3 day faster. I think we landed on a core emotion where people don't like paying for stuff which they don't see value in, and we just simply called it zero commission car insurance. And suddenly that started a narrative that arey main commission bhar raha hu, in other place I know what the product is, I know I need it. So zero commission car insurance just became a fairly clear proposition for people. And this also comes from zero commission mutual funds now that people are getting used to. So it's become a part of the narrative for people that I'm smart enough to figure out my own choices, and why am I paying 20-30% commission when I can, get it cheaper. However, this is still very product led. Now, when we move product value proposition, led, as we move into health insurance, or these kind of value narratives may not work, because that's maybe not what the consumer is looking for. As where we are sitting today as Acko, one of the things that we are attempting to do is how do you traverse the journey from being a product led brand to a more holistic to a more holistic brand. A couple of the exercises that we're doing in this space is, how do you there's a house of brands, way to do it. There is a, a product by product, a way to do it, and it's a tricky journey to traverse, because you're known for one thing, which is providing value on auto, and now how do you say you trust me for health in a meaningful way? But yeah, there are interesting solutions. If you look at price, convenience, and trust as three vectors, how do you keep the values the same but communicate it closer to the category? This is a journey that we are traversing this year. Let's see how it pans out.
Got it. I hope you're not breaking to me on a podcast that there's a sub brand getting created.
No, no, it could happen. We don't know. Yeah.
Like board meeting में तो नहीं बात हुआ. But no, I think you're right. I think it's interesting because the other way I think of your business over time, Varun, is one is insurance, insure-tech, but the other is we are a D2C brand, right? Like this whole
Yes.
fascination of D2C brand. It's a brand, and like some of the most valuable brands in India is financial products or financial services
Yeah.
brands. Therefore, how do we
Yeah.
keep that lens on is going to be critical. And to your point earlier, people are giving us money, so that's even a higher bar on the brand. Um, and maybe jumping onto the org piece, I know you spend a lot of time thinking about it and working with set of people. So can you walk us through like high level org structure at Acko, and who are some of the key leaders? What kind of teams they run? What have you centralized from a, like you have now 3 4 products, right, from a product line? What have you
Yeah.
kept separate? So just broad org philosophy, and then some of the marquee folks, senior folks you have.
Yeah, I think partly we've been lucky, and partly also I think we culturally have spent a lot of time trying to, sort some of this thing out, because I have a strong belief that companies don't get to mediocre outcomes or get killed because of competition, capital, or regulation. But really, they sometimes crumble from inside. And when the ethos is not clear, or the people are not effective, or a bunch of these things. So you can come out of a outward, or an external pressure that is created either by competition raising capital, or regulations changing, or some customer preferences changing. You can change, but you can change and pivot and live to fight another day, or get successful if you're internally strong. So my strong view is that companies crumble mostly internally than because of external forces. So we've always tried to sort of get some right leadership in place. And I think one key aspect on the leadership is that, are they, of course they need to be skill set wise good, functionally good, and so on and so forth, but are they cultural change agents? Will they make Acko better than what I could do individually, right? Like with that leader coming in, will they positively influence the culture and make Acko a much more resilient culture, apart from adding skill set on either technology or business domain or product, or operations, or whatever it is? So the way we've tried to go about it is that we've kept one that bar on the top leadership very, very high. Of course, you make some mistakes in the middle rung. Sometimes there's pressure to hire. There's a lot of work to be done. You shortchange processes, and we try to get better at that too. But at least one of the things that we've held close to our chest at Acko is not compromising on the top leadership. We spent 2 years trying to hire our CTO. We did not for 2 years. We recently got Sanjeev on board, which is somebody I've been in touch with for 4 5 years, and we did not see the need to bring in anybody till we got that right leader. So the way we're organized is that we have three businesses now: auto, health, and ecosystem products. Each of these businesses are almost independently run. They have their own product tech teams, their own P&L leader. They have a CEO. They do their own thing, including to the extent that there is no bandwidth transfer that is allowed between these teams. So you fight on your own, you hire on your own, you figure it out, on your own. So you can't be short of engineers and saying auto say mujhe do engineer, like that's not possible. You have to build your own business out. What we do, however, centrally, to ensure that we are able to replicate and not waste time doing things that we've done well before or have sanctity to some pieces is that central structures like uh, uh, user identity, payments, core systems, accounting, brand, PR. Some of these are almost like central services provided to each of these businesses. So there's a central core which is a service provider to these businesses. So you can ask of it, and they continue to strengthen the core. We'll strengthen payments. We'll strengthen our core accounting systems. We'll strengthen some APIs, and but you're free to use these services and ask for a change in these services. But that's the support that you get. That allows us to move faster, and each even if one business wants to develop a technology certainly differently, they do their own thing. They are flexible to do their own thing, but they continue to get a better suite of services from the top. And make their we continue to keep their making their job easier. That's broadly how we are organized, and I think that level of empowerment and accountability also helps us move. So that's at least how we structure.
Yeah, that's damn interesting. Um, I want to also shift on to some parts of your business which are very unique, right? Like it's a balance sheet heavy business, and it is also regulatorily heavy for the right reasons. Of course, you're taking people's
Yeah.
money, and therefore that bar has to be there. Um, how has your experience been dealing with regulators in India as a tech company in the space? Do you feel like regulations preventing or slowing down the pace of innovation at Acko?
Uh, I think short answer is yes, but it's also there are a lot of nuances to it. It's see, I think we need to. I think it's taken me time to realize that you sit on different sides of the table, and when the I would love to pursue some product innovation, create more value for consumers, for shareholders, ambitiously launch more innovative propositions for customers. But when the regulator looks at these pieces, they are solving for the last guy on the road. They are solving for how does this impact the broader ecosystem, and sometimes for them, they have to probably take 30 other variables into account, which you are not even bothered about, because that's not your job. Sometimes it's excessive, how much they ponder over some of these things. Sometimes I think is legitimate, but that's the way the cookie crumbles, right? Their job is to probably protect the last guy on the road, and your job is to say, hey, how do I build a business which is more innovative and faster? And these thought processes clash sometimes. But what we've learned is that if you want to build a regulated business in India or maybe anywhere in the globe, uh, you've got to be terribly patient. You have to work alongside the regulator, educate, take their feedback. Sometimes they have given us pieces as to why they're not approving something or why they don't believe that this should work, because it will not work for a certain set of audience, or it could be misused by a certain segment of the ecosystem in a different way. And how do they prevent that? And then we also scratch our heads. Yeah, maybe that makes sense that I can run it, probably with good governance, but the minute you open this up, it can go into, there's a leaky bucket somewhere. So I think it's a lot of convincing, taking the industry along, creating favorable opinion with the regulator, educating them, getting educated by them. And it takes time. So I think our and then you get used to it, that this is a cyclical way of, you have to have these cycles where you need to work alongside. But I
Yeah.
also frankly think that's a moat.
Mm.
As a very young company, when we were a year old, our audit and compliance teams were as large as our technology team in year one. So but what that in today, when I look at it, do I find it painful? At those days I did, but today I don't, because I think we are a much better company in general, with high degrees of governance, high degrees of audit, and we sleep better at night because we know that risks in our business get highlighted, just because we've had to put these governance frameworks in place much earlier than a startup typically would. So it has its minuses. You sometimes want the pace to be better, but yeah, it's also a moat. It's also better governance, and it really teaches you some patience. Is what I can tell you.
Fair enough. Fair enough. The other aspects, obviously, solvency and how the balance sheet needs to be always cushioned, Varun. And um, how's that changed your philosophy, or how's that molded your approach to fundraising? Um, how easy or difficult it has been? Of course, I know the answer, but would be great to know from you.
Yeah.
And how has that influenced your choice of investors over time?
Yeah, so yeah, it's hard because sometimes you can grow faster. You can see that you can grow faster, but you would curtail that growth because it is going to put balance sheet stress. So you need to be very uh, for lack of better words, well planned
Hmm.
about your growth. Just growing too fast in balance sheet businesses, whether lending or insurance, is also not a very smart idea. In some sense, because the faster you grow, move fast, break things. Maybe on product consumer journeys is fine, but you will not understand for a fairly long time what is how the risk on your book is playing out, whether it's lending or whether it's insurance. And in between, if you've scaled too rapidly and unfortunately some of those things don't play out the way you imagine, you could be sitting on a pretty big hole. I think good there needs to be fast growth, but I think what I like to call and what I keep telling the team is that in our business we need to have risk adjusted growth,
Hmm.
in some sense, because just a little tip over the line, a little bit greed on the top line, and that number doesn't play out, and claims just go out of whack, and you're sitting with the solvency hole, or you're now solving a different set of problems, in a completely different way. So I think one thing is that we need to be better planned, and so our capital planning cycles are far longer. We need to imagine where we would be 2 years from now, what is the kind of solvency that we'll need, and therefore how should we pace the growth. So we've got to plan ahead. Second, I would say that the solvency regime itself, the way it's in India, at least for our business, is likely to get better. Right, today one of the challenges in India is that if I underwrite a petroleum refinery, and I say that I'm insuring that risk, versus Mridul, you travel to Singapore for 4 days and I give you travel insurance. I collect $100 of premium here at a unit level, let's say, and $100
Hmm.
of premium there at a unit level. My solvency requirement is the same.
Oh, wow.
It puts the same amount of solvency capital requirements. Uh, it's not the same level of risk. While the premium amount may be, at a unit level, let's say the same $100
Correct.
on each side, doesn't mean the underlying risk is of the same gravity,
Hmm.
in some sense. So for our kind of business, which is largely retail consumers, globally, what has happened is that there is risk-based capital adequacy.
Hmm.
That if I'm in commercial businesses which are risky, a petroleum refinery goes down, it could take down insurance companies along with it, right? So
Hmm.
that's a very different risk compared to the kind of risk that we write. So we also foresee this regime getting easier. We believe that if the right global solvency benchmarks come into India, which we are hopeful in the next 1 or 2 years, it will make us capital efficient by at least 30-40%,
Hmm.
from where we are today. But last comment on this front is that anybody who wants to get into a regulated or a balance sheet business, uh, um, whether it's lending, you better learn how to recover the loans, or whether it's insurance. It's easy to grow in these businesses. It's just that
Yeah.
when things go south, it's really terrible when things go south. So I think our diktat to the team is risks that you don't understand, stay away from.
Hmm.
you know just stay away from it. I'll give you a case in point. When COVID was happening, or was at its peak, everybody was writing COVID policies, and I was sitting along with the actuary and the technology team saying, ये समझ ही नहीं आ रहा यार, 2 लोगों को होगा कि 2 लाख लोगों को होगा कि 2 करोड़ लोगों को होगा. Like there's no way for me to calculate a risk model around whether we should be selling. So let's stay away from stuff that you don't understand, where everybody was, it was the hottest selling product. We could have grown 30-40% month on month. We took a very big hit between April and August, when the first lockdown, April, May, June, we were 60-70% down on revenues, where other companies were growing. But we took a conscious call that this is something we don't understand,
Hmm.
and we should not do. I think that discipline in balance sheet business is very critical, and we're trying to inculcate that in our teams. That what you don't understand, don't do. Or if you're trying something new, understand exposure, that okay, I'll take 50 lakhs exposure and see what happens, not more than 50 lakhs exposure. I think this is hard to drive, but we're trying to drive it. I think a lot of the companies now understood, hopefully.
Yeah, no, that's great. I think this answers both on regulation, balance sheet, reflect a lot of maturity, and I mean that's much needed, right, in this space. If you have to, first
Yeah,
survive and be long term, I think you have to be very conscious of that. I agree with you. Like growth is easy, right?
yeah,
Really how you keep the balance sheet always strong. Um, and I want to spend some time, maybe Varun, last sort of set of couple of questions from my
sure.
side. It's been supremely helpful on future roadmap. So as an
Yeah.
org, now you have auto, you have a health insurance business also scaling well. You have ecosystem products. So where do you see opportunities next 3 5 years within these? How do you intend to double down? What do you intend to double down on? And are there some new products and themes that you are evaluating as well?
Yeah, so I think all of our businesses are in different stages. I think our auto business and our ecosystem business, I would like to call them relatively mature. There's huge room to grow, but they're mature in terms of size, in terms of unit economics, and for us, I think it's now about how fast can we take those economics that have worked out to
Mm,
a much larger outcome,
mm,
and also keep a little bit of one foot in the future within these businesses to say, hey, can we be changing the rules of the game as the country adopts to electric vehicles? Insurance will change, and so on and so forth. So how can we be forefront of the changes happening within our categories, right? So as electric vehicles come on, maybe the nature of the insurance product changes. So there it's about really scaling and actually shaping the future, as the ecosystem is changing. Health, I think, while we've done well over the last 18 months, I would still say that business, we still don't have a very good retail presence. It's not like we have a very big portfolio on retail. Retail, our flagship product is due to launch soon. We've been working on the standard products and employer-employee, but our Acko's flagship direct-to-customer health insurance product is the next big bet, which is due to launch soon. I think it'll take about 18 odd months before we think that we would be a sizable player and a meaningful player on the health insurance side. I think if I abstract this out, what we're really looking to do is, if my market is digitally native, about 100 million people, odd, uh, auto, home, health, and life. While ecosystem is a customer flywheel and brand exposure and frequency creator and data creator for us, uh, this is $1,000 protection wallet, $1,000 to $1,500 protection wallet per year, per family or per user. Auto, home, health, and life. Home may be smaller as a market, but it's starting to pick up. We want to see that, can we get 3 million, 5 million, 6 million, 10 million, I don't know what the answer is, people to have their entire protection wallet parked with us. How many people can park their protection wallet with us? And there's $1,000 annual wallet, 20-year recurring wallet. You'll always have a car. Your health and life have to be insured forever, almost forever. So I think the next big bet for Acko is, while we've done well, we need to solve each category deeply. But the overarching theme is that, how do we get 3, 4, 5 million people to have $1,000 a year recurring relationship with us? And that's a multi-billion-dollar business. And if we can provide that trust to users, we are starting to see some early signs of that people having multi-product relationships with us. We have our auto customers come back and say, when are you launching health? I'd like to dump it with you guys. And I use the word dump because that's how people think about insurance. I want reliability and ease. I don't want stress, on this. And if we can get that feeling going with customers, that, I can give it to Acko and I can forget about it, and I know it'll be managed. I think that's where we'd like to be aspirationally, that how many multi-product relationships we can own. If it's 3, 4 million people, I think that'll be super exciting. And I think one thing connecting to the last question and this one I want to add is, we've also, the choices of our investors also that has happened, given this theme that we're, or this pieces that we're chasing. This time we've been, fortunate to have the likes of General Atlantic, multiples, Canada mentioned, all these guys come in. All these guys are have been part of regulated businesses, they own finance companies, to banks, to life insurance companies, and so on and so forth. So I think what it gives us a lot of confidence is that they understand the business that we are in. The regulators like that. This is long term capital. It helps us to build the business in a way. We do get a lot of credibility with the government machinery and the ecosystem, because these shareholders are very, very well respected, in some sense. So I think somewhere, part by luck, part by design, I think we've also landed on a cap table, which the in a regulatory business, I think could be important, in the long run.
Yeah, no, that makes a lot of sense, and it's a fascinating vision to have millions of households with their thousands of dollars of wallet. I'm very supportive of that plan, Varun.
So how many Acko products do you have, is what I want to question
I
now.
think I have a lot of them. So all my cards are
Yeah,
active.
yeah,
I'm waiting for the health. I'm one of the guys who want to dump it on you.
yeah,
And most of the attachment products, if I'm checking out on Amazon, I just attach Acko. But most importantly,
sure.
all the cards, and then you know that, right? Like elevations on Acko, health
Yes,
insurance,
yes,
my health insurance
yeah.
Acko. Yeah, so I've also had a claim on Acko Health. So
Oh,
so
wow.
not at all works. But
Yeah.
this has been a great chat, Varun. I really want to thank you for taking your time for our chat today. I keep saying this to you one on one, but more broadly also, I think the opportunity we have ahead of us is so massive. And to your point, insurance is such a large market. We have a fantastic team, and we are so well capitalized that I'm quite excited about what future has in store for Acko. Thank you for joining us on Summit Series. It's truly been a pleasure, privilege for us at Elevation to be your partner in this amazing journey. And I've learned a lot from you personally. So wish you all the best for the journey ahead.
Thank you so much, and thank you for being our supporter from day one. Means a lot.